Weatherford has been a double more than a double off the low. And once again, we've got plenty of highlight reels, and we just flat make money for people. I mean, just that simple. Anyway, um, so I guess that's my main thing is don't do anything knee jerk, especially today. I'm curious to see what 3 to 4 p.m. brings. And having said that, this is my name, ROKT. Bought it here, and when you make 20% in 2 months, you have to expect you're going to get head handed to you some days. It's just the world doesn't work like that, that it just goes and goes and goes and there are no setbacks. This is the Spider S&P Kensho, what is this? Final Frontier ETF. And it owns like Planet Labs and Rocket Labs. And then after all that, it owns the Boeings, the Lockheeds, the Raytheons, RTX now. And so people with it, you see this breakout here yesterday on big volume. That's, I think, people late to the game saying, I have to own defense stocks. Well, look at this. You wanted to own defense stocks all the way back in here. So
right.
And this is my name. I mean, I own this, but I'm not wed to anything. I just went through at the end of the month 5,400 ETFs, and I'm looking for anything that takes out my current 10 and stay along for the ride, because we had having a heck of a year, but it's March, so there's a lot of wood to chop.
But in these defense names, I mean, given the amount of munitions that are being deployed, and I mean, this thing to me this thing might have legs for a while because of just how much stuff we're shooting off and blowing up. And I mean, they got a lot.
Plus we've already
everything.
And we had a lot drawdown from the Ukraine war. We've shipped a lot of stuff there. So we're we probably have a lot to refill.
Yeah.
Okay. Well, here's Raytheon, and here's the this is going to be an imperfect line. Here's the roughly the Russian invasion, and they've benefited. We've discounted a lot of that. I just think it's late. And yes, there could be some upside. I just think there's going to be more upside in other places. And part of it is, and we saw this with Netflix, and I hate keep coming back to that, but it really worked. When you get this far above breakout points and meaningful moving averages, it's tough to extend them. It's possible, but I don't think it's the way to invest.
So given the move in Netflix recently, Bakes, do you start, I mean, it stopped going down. Was that just a dead cat bounce off of this, take the M&A deal off the table, put some money in their pocket, thank you for the cancellation fee of almost $3 billion.
Yeah.
And now what?
Yeah. And, and this isn't the game I play, but I think this is a logical place for it to rest at 104 or 5, something like that. But this is my point again. Here it is, and we talked about it. It's so good it's bad. Look how far above the 200-day moving average is. And then when they were, quote unquote, going to lose Warner Brothers, here's as far down. That's about it's almost, look at the symmetry, frankly. It's so bad it's good. And if someone had the guts to I didn't, I'll be full, and I can't buy individual names anyway. But yeah, this is a nice buy here on the bet that they walk away from the deal, and then they just start printing money again. And oh, by the way, buying a ton of stock back. I think it's a terrific company. It's a terrific long-term hold. I think the user interface is garbage after all these years, and I don't understand why that's not better. But that's a different topic. So I think it's a great own here, a great hold here. I think you're going to stall out at 103, 105, and then you're going to have to chop through all these people that have lost money over the last 3 years back here.
Yep. All right. That's good. That's good insight. All right, boys, this is getting long. Even though we were we screwed the pooch for about 20 minutes there with our technical difficulties. So unless you got anything more, let's wrap it up. Let's appreciate you guys jumping back on and giving us another shot.